All right. Hello, everyone. Thank you so much for attending today's Home Buying Unlocked webinar hosted by myself, Dave Summers with NFM Lending, and Elaine Sakachi of LPT Realty. We are excited to have this opportunity to talk about what's happening right now in the housing market. We have a lot of individuals thinking about buying, investing. Do I sell? Do I sell first? There's a lot to know. And Elaine and I wanted to make sure that we put together a call that can help add resourcefulness to those decisions and help support what's happening in the market. So we appreciate you carving out some time today. This is a call we are hosting each and every month. So for those that could attend, please, by all means, recommend this call to any friends, family, colleagues. Our goal, again, is to just make sure we're giving you great advice to help anyone making a decision to purchase in this current market. So without further ado, I'd like to do a formal introduction. Elaine Sakachi, one of my great real estate partners here
Thank you.
locally, real estate professional. I have learned a great deal of different tactics and tips and tricks from Elaine. So I'm excited to have this opportunity to be a part of a collaboration where we can both come together and put together some great advice for our audience. So, Elaine, I'm going to turn it over to you. And again, thank you all for attending. Here we go, Home Buying Unlocked. Elaine, it's all yours.
Thank you so much. That was a great introduction. Thank you, Dave.
Yep.
Yeah, so again, Elaine Sakachi, realtor with LPT Realty. I'll talk about myself here in just a little bit about my background. But we wanted to kind of kick things off today with a couple of fun quizzes. Um, just some fun stuff. So when you are thinking about the answer to these questions, you can either put them in the chat or just, however you want to do it is fine with us, but just be thinking about what you think the answer is for each one. So for the first question, so what percentage of home buyers in 2024 in the US were first-time home buyers? The answer might be a little surprising. So the answer, um, and I'll explain first. So the first-time home buyer market share decreased, by the way, to a historic low of 24%, down from 32% last year. So while and Dave, I'll have you back up those slides. I'm
Yep, sorry about
sorry.
that. Trying
No,
to
it's
get back here.
okay. Yeah,
So we might
I
go
don't
through
know
the
what
whole
happened
thing
there.
real quick here, guys. Sorry, technical difficulty.
No, it's okay.
Here we go.
No, no, I'm not sure what happened.
And there we go. Sorry about that, Ron. There we go.
We're almost there.
Get to that PowerPoint again. All right. One
Well,
moment
while
here. Go
Dave's
ahead.
working on that, yeah, I was just going to share that. So while home buyer ages have hit an all-time high of 56 years of age overall, compared to 49 years of age the previous year, and 38 years of age for first-time home buyers. Again, getting older, it was 35 years of age the previous year. And then for repeat buyers, 61, which again is older from previous. It was 58 in the previous year. So, and again, all of this is according to the National Association of Realtors. So again, the answer is B, 24%. So about a quarter of buyers out there are first-time home buyers. All right, so next question.
See if I can get this to work. My goodness, I tested it before we started today's call, so let's see here. Well, Elaine, I'll have you ask the question. I apologize. I'll see if I can get this to work for the slide,
Oh,
but it looks
okay.
like it has frozen. Modern technology sometimes at its finest. So,
Oh, no, no. Okay, so the next question was kind of a fun one. It was, do you, in the state of Georgia, do you have to disclose that there was a death, be it a murder or a natural death, for a home that is listed for sale. And you might be surprised by the answer. Now, this changes from state to state. In some states, like California, for instance, you are required. I've heard some crazy stories of how they don't disclose it to buyers until closing day, oddly enough. But in the state of Georgia, the answer is no. According to the 2024 code, section 44944.1, no, you do not have to disclose that information to home buyers. It's incumbent upon you to ask the question of the seller, what's happened in this home? What kind of information can you provide? Georgia is what we call a buyer beware state. Which means, again, it's incumbent upon the buyer to be asking all of the questions. That's why the home inspection process is also so incredibly important. All right, Dave, if we're able to move forward to the next slide, I was just going to share.
I think we're
Um,
back.
there we go. Yay.
We are back.
So this is just a flyer, why choose me? If you can see that clearly, hopefully you can. It's just talking a little bit about what's important to me as a realtor from that experience and knowledge, working really hard, being loyal, being professional, and really most important is the communication. That is incredibly important to me and working with my clients. But I've been in the business for over 7 years now. Prior to real estate, I worked as a consultant in ecology. So, think wetlands and protected species and habitats and things like that. And I was in the regulatory and permitting side of that for many, many years. So I've got a really unique perspective of real estate when it comes to, to buying and selling property, especially raw land. All right, Dave, I'll have you move on to the next slide. So this data is from May. I'll have to update it the next time we have our webinar. But really what this is showing you is just kind of a snapshot of what's going on. So clearly I'm showing here Chatham County, but I can pull this data for anywhere. So if you have questions specific to a different county, a different city, we can pull this data to be as local as you want it to be. But what this is showing you in a nutshell is that we are in a really strong buyer's market right now. And what does that mean? That means that while buyer demand isn't super high this year, it's actually been a very slow year. We just, things are moving slow. Homes are sitting on the market for a long time. We're looking at 3 or more months. It's been very common lately. So as homes are sitting on the market longer, inventory is increasing. That means that buyers have a greater ability to negotiate on pricing as well as concessions such as closing costs and whatnot. Great example of this is a buyer I was working with a little earlier this year with new construction. Historically, I've never been able to really negotiate pricing with the home builders, especially when it's a really strong seller's market or their inventory is low and buyer demand is high, right? That's a classic seller's market. But this year it's been different. And while their prices fluctuate normally, my buyer had waited a little bit before they decided to go ahead and submit that contract. And as they waited, the prices went back up on this new construction. This is here in the Savannah area. And they said, well, what can we do? We're an all cash buyer. Can we negotiate on that price? And I said, well, let me see what I can do. Long story short, surprisingly, I was able to negotiate that price down by $50,000. So I think that's a classic example of how we have a lot of wiggle room with purchase price in this very strong buyer's market right now. All right, so next slide, if you could please, sir. All right, so let's dive into some more of this fun stuff. Going back to finding a great real estate agent, me, hopefully you choose me. finding a great real estate agent is really, really important, right? You want to make sure because they're going to be there with you through the entire process from, the initial discussions to, what your home search is all about and your budget, getting you in touch with a great lender like Dave. And then getting you all the way through not only the selection process, but the negotiation process, making sure that, we're presenting, your best offer, getting the best deal, but getting you through the entire transaction smoothly from the beginning to the end, and then getting you through to closing. That's what a good agent is going to do. Again, communication is key, and being an advocate for you and fighting for you is really, really important. And that's what's important to me, and making sure that I'm the best for my clients. Um, a good agent's also going to be there for you after you close. I've had some buyers have issues with homes, sometimes new construction, where they're like, hey, what's going on? I'm there for them even after we close. So again, you want someone that's going to be knowledgeable, experienced, and just really plugged in to this whole process. All right, so now you are ready to go find a home. Um, Make sure that you are utilizing your open houses, your virtual tours, because this can be really inspiring and give you some great ideas, figure out what you want in a home. Go to open houses with your agent. They'll show you what to look for and what to ignore. You don't want to sweat the small stuff, like, cosmetic things. Again, those are things that can be negotiated. Also online, there are a lot of virtual tours and 3D tours available. You want to take advantage of things like that. Something else too that I offer, especially for my buyers that are not here locally, I do offer video tours. And so again, a great agent is going to offer that to you to do either a live video tour with you, or they'll record one and send it to you. Okay, so I don't know what happened to big tip number one. Could, could we back up to big tip number one?
Yeah, let's see here.
Oh, that's okay. Oh, we lost it somehow.
We
Okay,
lost it.
that's
Uh-oh.
that's
Okay.
okay. That's all right.
Hmm.
So, big tip number one, is that if you go to an open house, with your agent, or even if you're not there with your agent, just understand that the on-site agent, there at the open house, they are representing the seller and the seller's interests. Don't give away any personal information to them, or even your feelings on the house, because believe it or not, that could be used against you during the sales negotiation process. So be very careful what you're saying at an open house with the agent that's there, again, representing the seller. Okay, now we can go to tip number two. There we go. Um, Along those same lines, when you're viewing a home with your realtor, make sure you are not discussing anything about the home, be it the purchase strategy, anything inside the home that you liked or disliked. They're in the home or even at the front door, because yes, cameras are everywhere. We live in an age where it's to be expected. There's going to be cameras in the home. At a minimum, we're going to have a camera at the front door, and they are listening. I've gotten some feedback before in the past from sellers, that were actually listening in on conversations. So be real careful what you're saying, when you're in the home or in front of the home. Step away from the house and talk with your realtor out at the street to discuss what you feel about the home, and any kind of, especially strategy on purchasing that home. All right, next big tip, Dave. There we go. Just know that a good realtor, they're going to be working very hard on your behalf to negotiate on the price, and the seller paid closing costs. Again, we are in a buyer's market and we have room to negotiate. So I just wanted to reiterate that, how important that is, especially in the type of market that we have right now. Just know that it's okay to negotiate with the seller. I know not that long ago, we were in a very strong seller's market during, I called the COVID years. we just, it was a challenge. It was a real challenge. We had multiple buyers, multiple offers, contracts on homes, lots of competition. Um, those days are gone, at least for the time being. And, but your agent, this is what they're here for. They're here to help you with this, creating a strategy and negotiating with the seller so that we can get what we want. And in how we approach those negotiations, that's going to depend upon the starting list price, the current housing market. And again, work with your agent on this. They've got the experience to help get you through this process to present a strong offer and negotiate strategically on your behalf. Because right, we want to win. We want to be successful. Um, Now, once you have purchased your home, kind of moving ahead a little bit, make sure that you budget for other things, beyond what your monthly mortgage payment's going to be, because there's other things to keep in mind, like your maintenance on the home. Now, during your due diligence period, when you're under contract, you're going to have an inspection, a home inspection done. Definitely use this to your advantage in understanding what the maintenance of the home is going to be looking like in the future. So like, are you going to have to replace the roof or make repairs to the roof? What does the HVAC system look like? Is it going to need to be replaced sometime soon? As a general rule of thumb, um, you're looking at, about a 1% of your purchase price per year as a maintenance budget. And I know that seems a little high, but it can be if you have these items like the roof and the HVAC or the water heater, that may have issues, which leads me into tip number 4. Be sure that you're talking to your realtor. And now, again, this is going back to the negotiation process on your contract, because this is where we put this in. But make sure you're talking to your realtor about getting a home warranty. Many times we can get the seller to cover that cost, at least for the first year. With a company like Old Republic, for instance, a gold warranty is, almost $800. Let's get them to cover that for you so that at least you have some peace of mind knowing that, gosh, if the refrigerator breaks down or dishwasher or whatever, or something else in the home, you know that you've got good coverage for that home. So you're not paying for everything out of pocket. Um, and let's see, I've got some financial points to go over here. I'm not going to dive too deep into this stuff because this is going to be Dave's forte. He's going to go into a lot more detail about this, but there are some things here that I wanted to go over with you guys on the financial side of things. We want to make sure that that you're preparing, for this part of the process. So let's say that you're a month or maybe a few months or maybe even a year away from purchasing your home. Start saving, right? Check on that credit score, work on the credit score if needed. Avoid buying anything really big right before you put in an application for a home loan. And then decide on how much home you can afford. Again, these are great things too to talk to with your lender about. They're going to help guide you through this process. But again, some important things to know when it comes to these costs. You're going to have a down payment unless you're VA or in some cases, I know Dave has some really wonderful zero down programs that he'll discuss. But if you're going conventional or FHA, a lot of times you're looking at a minimum of about 3%. It can go up from there. Again, it depends on a lot of different factors, which again, your lender will review with you. And if you're going to need some assistance again with that down payment program, know that there's a lot of government programs out there that help with first-time home buyers. We have first-time home buyer assistance programs, again, that help with down payments and closing costs. This is income driven and credit driven. Again, your lender will help you, but there's things like the Georgia Dream homeownership program. The city of Savannah also has a Georgia Dream mortgage product. So again, talk with your realtor about this, and more importantly, talk with your lender about this. Be thinking about, again, which loan product is going to be good for you. Explore your mortgage options. Compare the different loan types. Look at conventional versus FHA. The interest rates vary for these different types of programs. One might be, you may be thinking, oh, I'm going to go with a conventional loan, but the FHA may have a better interest rate. So explore all of this. And again, if you're active duty or a veteran in the military, of course, the VA loan product is very good. And just a little tidbit, because a lot of folks don't realize this, surprisingly, but did you know that you can take out more than one VA loan? A lot of people didn't know that, but you can. Again, there's some factors behind that decision, but it is possible.
I have a client, Elaine, that has 3 active VA loans. 3.
I've worked with and some really young VA buyers who do the same thing. So it is very possible. Um, so let's talk about your monthly payment. Besides that purchase price, don't forget you're going to have some other expenses like your homeowner's insurance, property taxes, utility payments, those maintenance costs we were just talking about. Don't always rely on the mortgage calculators that you find online. Those are fun to use and really easy, but they're not going to be accurate. Again, talk to Dave, talk to your lender about that. They're going to be able to give you a much better representation of what those costs are going to look like, especially if you have selected a specific area or even better, a specific home. You can say, hey, what about for 123 Main Street? What is this going to look like for me in terms of my monthly payment? Get that loan paperwork together, guys. This is like the hardest part of the loan process, but reduce the stress by just preparing yourself in advance. Get bank statements together, pay stubs, W-2s, your tax returns, statements on any outstanding loans, all of that stuff. They're likely going to be asking for that. And so just go ahead and start getting all of that information together. All right, so now you're ready to get pre-approved, right? So now with that pre-approval, this means your lender has reviewed all of your financial paperwork and they're ready to give you a loan up to a certain amount. You're going to want this pre-approval before we go and look at homes. And the reason why is because we want to know, well, what's your budget going to look like? Because until you actually go through this exercise with your lender, you may think, again, using those online calculators, you may think you know what your purchase power is, but it may be higher, it may be lower, you may be spot on, but it's really important that you get that pre-approval first before we start looking at homes. So again, this is not only reassuring you that you can achieve your goal of home ownership, but it's attractive to the sellers as well. Personally, I will not present an offer to a seller until I have that pre-approval, and you're going to hear that same thing from any realtor that you work with. And the reason why is a seller just won't even entertain your offer until you have that pre-approval. So I can't stress enough how important this is to have that. So, which leads me to big tip number 5. Again, that loan pre-approval is crucial when submitting your offer. Again, most home sellers won't even consider it, especially if you're in a multiple offer situation. That pre-approved buyer is going to win over every single time compared to a buyer that hasn't even started that pre-approval application process. All right, so let's talk about expenses to consider when buying a home. Let's briefly go over closing costs. Again, I'm trying not to go too deep into this because I know Dave's going to cover a lot of this. But when you're estimating how far your cash is going to go toward buying a home, again, make sure you're adding in those closing costs. Your lender's going to help you estimate what those costs are going to be, but which leads me into big tip number 6. Um, Rule of thumb is that you can expect your closing costs to be somewhere around 3 to 3.5% of purchase price. Now, of course, this is going to be different if you're an all cash buyer or if you're putting, a lot of cash down. But that's a pretty good rule of thumb, is that 3 to 3.5%. So that will give you an idea of how much you need to start setting aside. So down payment, closing costs, and those other expenses. Some of some of those other expenses are going to be things like you're going to have your earnest money deposit. That's typically 1% of purchase price, right? There's going to be lender fees like the appraisal fee. So there's a lot that goes into this. So again, having an in-depth conversation both with your realtor and with your lender, will advise you on how much you really need to be setting aside. Again, this can change depending on what type of buyer you are and if you're using one of the zero down programs. Also, to be clear, we can go to the seller and ask for concessions up to a certain point of what's allowable for that loan. So I will, especially in a strong buyer's market, I will always go to the seller and say, hey, we want, all the closing costs, maybe $10,000, or we want half of the closing costs covered by the seller. Sometimes we win, sometimes we don't. It depends on how motivated that seller is, but I will always try to get them to cover closing costs as much as possible. All right, so are you
Well
ready to
done,
purchase
Elaine.
the home? Yeah. Just know that most mortgages take about 30 days to close, give or take. Again, it depends on a lot of different factors, but I've said enough about the financing side of things. I'm going to hand it back over to Dave.
Well, thank you, Elaine. And yeah, thank you everyone for being on the call once again. So just to introduce myself, I'm Dave Summers with NFM Lending. I have been lucky enough to be a mortgage professional since 2002. So I've helped thousands of clients purchase homes, buy investment properties, second homes, vacation homes, you name it. There's just every single client has a situation. And that's what we are all about, is preparing you, like Elaine had mentioned, getting that pre-approval letter. I think too many times clients are thinking, well, I haven't found a house yet, so I'm not quite ready to make that jump. We're here to make sure we're supporting and planning and preparing to the point where you feel comfortable moving forward. So I'm going to take some time here to kind of deep dive into some tips and tricks of my own, but we're going to start off with a quick quiz. It is quiz time once again. If you could ask a mortgage lender anything, what would be the most important question to ask? I'll give some people some time to mull that over. Feel free to hit the chat with your question. And here's what I suggest. The nice thing about that question, it depends on your needs. So not every single client, as I mentioned, has the same circumstance, right? The right questions to ask are the ones that are going to be impactful for what you need to know, such as your monthly affordability. Nobody wants to put you in a house that you can't afford. That would be terrible, right? So we got to look at affordability. Commonly asked questions that I get really right now is, hey, do you have to pull my credit to qualify? And I will tell you, Elaine, that is a commonly asked question. I think it's because so many people were protective of their credit because they worked hard to maintain it, that they don't want to get the old hard ding. Our company, we utilize a soft pull credit review. And what a soft pull does is it allows me as a lender to see your FICO score, which obviously is very important. It allows me to see your monthly debts so I can establish affordability. But we do all of that without actually counting it as a hard hit, a hard ding, or a hard inquiry. So these are some of those jargon words we hear often. So just know, rest assured, we're here to prepare you, but not at the expense of losing precious FICO points, right? Every point counts. So I'm going to dive into my first lender tip. Number one, know before you go. Back to the discussion I had earlier with different clients, different timelines, different situations. If you're renting right now, as an example, the one thing we want to focus in on is how to get you from your current residence to your next residence, right? That'd be the home that you're purchasing. You may have a lease that you're not sure how to break. One of the things my team and I will go over with you if you're renting is we are going to help make sure you are on path to figuring out what it takes to break a lease. And if your lease is going to be up this October and you're like, hey, Elaine, I think we're going to start looking in September. you're probably going to be let down because really the best time to look is when you're pre-approved, right? You're ready to start looking. If you know your lease is going to cost you a little to break, at least we can figure out that that would be a better solution for you as opposed to finishing the lease, losing that extra rent payment every single month. It might be better to break the lease, part ways at the expense of finding the best house and getting in the right terms. So these are all things to consider. Not a lot of clients usually think of that up front, but highly recommend that you start to look into what it looks like to break a lease. Timeline. Obviously, if you have a house to sell or you've never bought a house, timelines are important. We focus on timelines. We need to know if we have to get you squared away on a pre-approval quickly, which we typically want to do efficiently, right? We want to make sure you're ready, but we want to know your timeline. That helps Elaine too. We want to make sure that we are timing things up as well as we can. Credit optimized. Having your credit optimized is important. And what I mean by optimize is making sure that you haven't, like Elaine said, made any big, strong, huge purchases, in the last 30 to 60 days before reaching out to a lender. I can tell you that one of the big things that hurts people the most is that new car loan or lease. The way that works, real quick, is if you get a car loan 30 days ago and I go and do a credit check or soft pull, you're going to notice your score went down. And the reason that happens is you didn't do anything wrong. You just got a new car. Maybe you needed it. But what's going to happen is it's a new debt. And second to a mortgage or even student loans, a car loan is one of the biggest debts you're going to have. And so creditors will actually retreat your score down to see how you perform on that new debt. We see it often. So I highly recommend if you're thinking about buying a car and a house, talk to me first. That way we can establish where your credit is and we can avoid any any of the auto dealers hard hits that could bring your score down and essentially could hurt your interest rate. And then finally, strategy. Let's get strategy on the table. We got to know what works for you. We got to know if we're working with down payment assistance programs, first time home buyer programs, VA. There's a host of things to look into. So strategy is important. All right. Lender tip number 2, know your options. Elaine mentioned grants. There are state grants that can help you with down payment assistance. New for Georgia, we offer now a 101% financing option. So unlike the 0% downs, we now can finance 1% of the purchase price, which can help you with closing costs. So Elaine will always do her best to see if we can work on an arrangement to get some credits from the seller, but sometimes you need a little extra. So knowing we have a 101% option to offer you is going to help you significantly. And that is for VA, or excuse me, that is for FHA and conventional. So both options. Um, First time homebuyer programs. We have Georgia Dream. There's Dream Maker, which is the Savannah program. Community lending. This is kind of a new one for most people. Some houses, believe it or not, are located in areas that qualify for lower fixed interest rates. That's important. I could imagine closing on a house with a bank or a lender or credit union, and they didn't mention that at all. And meanwhile, I found out later that I could have had a 1/4% lower interest rate just because of where the house is located. My team and I have those resources, so it's easy for us to identify if the house that you're looking at with Elaine actually falls in one of those zones to qualify for a lower interest rate. Again, it's all about saving you the most and providing the most value. And VA, if you're an active duty member, retired, let us see if you're eligible for VA. We will actually obtain a certificate of eligibility on your behalf. We are directly endorsed by VA, which gives us the access to get that information quickly. That way we can determine you are in fact eligible. If you have a VA loan already, we talked about this earlier, you can have multiples. There's entitlement calculations that we use upfront to determine how much you can continue to afford through VA. I have a client recently who wasn't sure if he could do another 0% down. He's eligible for another 0% down on his second VA loan. So lots to know. All right. I'm moving right through the tips here. So let's dive into tip number 3. This is a big one. This is a big one. Know your budget, right? It's your budget, not the lender's budget. So just because you are looking at a price point that is adequate to what you want to purchase doesn't mean necessarily it's going to be an affordable option, right? But knowing that up front is going to help you feel comfortable about even targeting homes in that price point, right? I put together a couple debt ratio percentages. If you see on your screen, 38 and 50. All right. I'm going to give you some quick mortgage knowledge. You're going to feel like an expert after this. 38% or 38 in this ratio represents what's called a housing ratio. All right. So if you took your gross income of, let's say it's 5,000 a month, take 38% of that number, and that's ideally what your total housing payment should be. Now, we do have clients go over 38 very frequently. Again, this is a good rule of thumb. Just try to be around 38% of your total income to your housing payment. And that's a good way to establish a budget. The 50 represents a total debt ratio. So if I take your new proposed housing payment plus your car loan, your credit cards, any other credit debts you have, and put those together, using that against your monthly income, we do, we don't want you over 50%. Nobody wants to be over 50% of their gross income going out the door to their housing, their credit debts, their car loans, etc. So 38, 50. Great, simple, easy math for you. It gives you a great perspective. I want to talk about this real quick because Elaine brought it up. When you go online and you're looking at homes online and everyone hears about realtor.com, be careful. This happens often. Those payments take some assumptions. So if you ever go to realtor.com, you're like, oh man, look at that payment. Wow, that's super low. I can afford that. Be careful because what happens is realtor.com doesn't know your situation. They don't know your credit. They don't know your down payment. So they take an assumption and they assume that you're going to put 20% down on the house. Now, why they chose 20%, I don't know. But as you can see, that would really change things if you're going into a $400,000 house you found online at realtor.com and you're like, man, that payment's not that bad. It's because it has a 20% down payment. So just be careful with that. Again, speak to a lender. We can run numbers 6 ways to Sunday. So if you need options, need payments, just you can always message me and my team. We'll be available to do that. The other thing I want to mention to everyone, this is something that's becoming bigger. There's a lot more debt out there right now, just the way things are going in the economy, but know your expenses, know your utilities. Elaine did a really good job of talking about what your utilities and maintenance could be for your house. That's important. Like that's what experts do. We're looking ahead because we've done this so long to make sure that we're helping you succeed in this market. Nobody wants to be house poor. That's a terrible feeling. So know your expenses and know where money's going. Know how many times you go to Starbucks or McDonald's or those things. If you're trying to budget for a house, this is a really good time to kind of evaluate, where is my money going? You don't always have to make more money. Sometimes you just need to spend less, right? So think about that. And by doing so, you're also going to help establish more savings. Buying a house, even though we have 0% down, doesn't mean we want you to buy a house with zero money left, right? Having some money as a cushion can help when it comes to minor repairs for the house, furnishings, maybe you want to get some fresh paint on the walls. So we're always going to try to guide you into a price point that's going to allow you to have a little cushion of money left over so you don't feel like you are now all of a sudden broke after buying a house. So these are great tips. I see this often. Um, One thing I wanted to mention, lenders, we are qualifying you based on a payment, not a price. So I want to know your price range. That's important. But ultimately, I want to know what your payment budget is, right? Back to the whole budgeting thing. Let's figure out what your budget is, what you're comfortable doing. We're going to qualify you for the payment. Everything else then falls in line when it comes to price. You may have a large down payment, so your loan amount's a lot less. You may have a low down payment. Your loan's going to be much higher. Your payment's going to be higher. So we need to establish these things up front. All right. Quiz time again. This is a nice question. I love this one. All right, what's better? Having the seller reduce the purchase price or having them pay for closing costs? Hmm. Feel free to blurt it out or message us through the chat.
I know, I know.
All right, and here it is. So It depends on your
It
needs,
depends.
right? The reason I say that, guys, is because every client is different. This is not a one size fits all. You can't just apply for a loan on a phone. It's going to tell you, hey, you're best qualified for this. You really need this advisement. This is what we do for a living. You may have a situation where, you know, you think price is better. Like, I don't want to pay that much for the house, right? But we also know that, hey, but based on, paying for some closing costs, we really would rather the seller help you with the credit for the closing costs in lieu of the price reduction, right? The price reduction, I put this as a little fun fact on this slide. This actually has surprised a lot of people. For every 10,000 in price, okay, up or down, let's say down, $58 is the difference on average in the monthly mortgage payment, right? Now, 58, I'm not saying is nothing, but imagine $58 is the decision maker monthly for you to make an offer at this price or $10,000 less, right? Knowing ahead of time, and that's what we do in preparation for our clients, you may need some closing costs. Elaine's going to know what's the right way to negotiate that, right? If it's a newer listing, Elaine, hey, I don't know, it's still a buyer's market tremendously. You might be able to make an offer with some closing cost credits, right? But when you start to come after and say, hey, I want to lower the price and I want the credits, this is more of Elaine's wheelhouse. You don't want to take too much, right? The seller wants to be amicable, right? But
And
knowing
the, and
which,
the answer and the answer to that, Dave,
yes, go for it.
it depends.
It does
'Cause
depend.
I get
Yeah.
this question, yeah, I get this question all the time of, how much negotiation power do I have? Are we going to be able to reduce the purchase price? Can we get some concessions like closing costs? And I don't like not giving a straightforward answer to that question, but it
Mm.
really, really depends because the answer to this is also driven by the seller. Because some sellers, they're anxious to unload that house as quickly as possible. Other sellers have all the time in the world and they're just going to wait until the right offer comes along. So it depends. And again, that's the job of the realtor is to get that kind
Mhm.
of information. So, we're informed and we know what the best strategy is moving forward.
Absolutely. So, I mean, with that said, guys, there's a lot to know, as you can see, whether you've done this before or not. Having a lender and a real estate agent on the same page is going to help you navigate through the market. We want you to make the right decisions, but you can't make the right decisions without the right preparation, right? And so, um, let's jump into our last and final slide. I'm just going to open it up for some Q&A for anyone that would like to message us any questions. Please do so. You all have our email addresses. We've sent out a couple reminders on this call as well, but we definitely would encourage any questions. We're here to help you. If you want to schedule a call with either myself or Elaine, you can email us back, and we would love to set up some time to go over a quick consultation. Just get you squared away, even if it's going to be a while before you decide to, really get in the market. I think Elaine would agree. I'd rather have a prepared client than a last minute client, right? Last minute, we're just kind of stuffing things together. We're trying to make it work. It just doesn't really work as well as a client that's been prepared. So, Elaine, any final thoughts you would like to present?
No, no, not really. I was just going to add that we have been recording this webinar, of course, and it will be made available. So if you need to go back and review any of the information we provided, or if you want to share it with someone else, we will have that posted up to social media. And Dave, I'm not sure if you're going to be sending it out via email to everyone also, but we will have that available in case you want to, like I said, to review something we said or to share it with someone else.
Yeah, great, good point. And yes, I will be sending this out to our attendees. And yeah, feel free to forward it on. We'd love to continue to spread this information to others. Stay tuned. We'll be having another call each and every month. So again, we're here for you. Appreciate everyone's time, and we are right on the end of our time slot. So I will let everyone get back to their day. We are excited to have the opportunity to work with you. So please let us know what we can do for you.
Thanks for joining us, everyone. Thank you.
Thank you guys. Take care.
Bye-bye.